Welcome to Meet the Thought Leader with Katrina Rogers Consulting. Hi there, and welcome to Meet the Thought Leader on Thinking Cat. I'm your host, Katrina Rogers, and today we're meeting R&D tax credit expert Kasey Devine, who is a district channel manager at ADP. With an MBA and years of experience in sales and revenue generation, Kasey focuses on helping tech and life science startups navigate the tricky world of federal and state R&D tax credits. We'll learn all about these value-added tax options and how you can use them to throw your runway a lifeline when it matters most. But first, here's a quick message from our sponsor. I work daily to bring you new insights and help life science entrepreneurs and their advisors break through obstacles to get innovative medical products from bench to bedside. Please help me by subscribing to and sharing the Thinking Cat newsletter. Thanks for joining us today, Kasey.
Thanks for having me. It's great to be here.
Awesome. So let's start by having you telling us about your background and how you became an expert on R&D tax credits.
Absolutely. I have been in the HR tech and outsourcing space for the last 10 years. And that's really on like the people operations side of the house. And you might hear that and think, well, what does that have to do with tax? Well, research and development tax credits typically are driven by wages, and sometimes they offset payroll taxes. And so that's kind of how that connection happened. I've been within the startup community really heavy since 2020. And that's really where I started getting more and more into R&D tax credits specifically.
Excellent. Awesome. So let's clarify that a little further for the audience. Can you describe what are R&D tax credits and why are they so valuable for startups?
Well, when you hear R&D, you're very tempted to think of lab coats, and that is true, but it's not only lab coats. So what the research and development tax credit is a US program that incentivizes United States companies, so organizations with an EIN in the United States that are for-profit entities, to go and create or improve upon a technology or a physical process. And essentially what the US government's attempting to do is to incentivize innovation and to happen in the United States, hoping that also then generates jobs in innovation. Why they're so valuable for startups is because you actually, when you hear of a tax credit, you typically think of income taxes. And a lot of the times, startups will think, well, that doesn't apply to me. Maybe we're not profitable yet. Why it's so valuable for startups is it actually can be used against your Social Security and Medicare, the employer portion of payroll taxes. And so you can think about your total research and development budget, and we'll talk about what qualifies and what doesn't, I think, in a sec. But it's about 8% of that, at least, coming back to you in the form of taxes that you don't have to pay.
Wow, that's pretty impressive. So are these only at the federal level or are they also at the state level?
They are also at the state level sometimes. So I am calling in from the beautiful state of Minnesota, and Minnesota does have a program that actually just recently was expanded. But about 30-ish states in the United States have some sort of matching or follow-along program to the federal program. They all are different percentages, different rules, et cetera. But typically, if you're in a innovation hub, more likely than not, it's a federal tax credit with some sort of state match.
Nice. Excellent. So how does a startup qualify for these tax credits?
Well, this is not something that you can just write into your tax return and take. I don't know if you've noticed, but the IRS is not keen on giving away money without you proving that you deserve it. So you have to pass this standard called the four-part test. And really, it's just making sure that your company is actually performing innovation. And so for lack of a better term, like I could go through the entire four-part test, but for lack of a better term, if you're following the scientific method, even roughly of I have this idea of something that could work or make it go better, I'm going to test that and then iterate. And you're using the sciences, whether they're physical science, technical science, et cetera, to do that work. That qualifies as R&D under the four-part test. And then you now have another number 4, which is 4 different buckets of costs that are spent on those activities. W-2 wages, 1099 contractor payments, either to an entity or to an individual, supplies, and then also cloud computing if you're in the tech space.
Interesting. So if a company meets the criteria in that four-part test, does that sort of automatically roll their eligibility to whatever state level credits that they have?
Typically, yes, although some states will only invest in specific industries. So I would definitely encourage you to talk to another expert, whether it's me or somebody else, about state specific rules. But specifically to where I am in Minnesota, the answer is yes. If you qualify at the federal level, you qualify at the state level as well.
So you work specifically in Minnesota, or do you work in some other states up there in
Yeah,
the upper Midwest?
great question. So, as a sales-driven professional, my territory is the state of Minnesota. That's where I'm calling on folks. I've worked with companies throughout the country via introduction. So, if you happen to reach out to me because you heard this, don't worry, I won't send you to somebody else. You can still chat with me.
Cool. Awesome. So this is a sort of a loaded question given what we had, the conversation we had earlier, but could you tell us what's happening in the tax credits world that has you excited or optimistic?
A lot, yes. So at the federal level, and this is where I'd tune in, the One Big Beautiful Bill Act did a lot. It's a 1,200-page document. Not going to talk about much except for the part on R&D amortization. So by definition, that act had nothing to do with research and development tax credits. And this is a common misunderstanding. Back in 2021, there was legislation passed requiring that companies that are spending money on R&D to amortize those expenses over the course of 5 years, which was a very difficult thing, especially for younger companies, because it was a massive cash flow hit with taxes. And so some of the companies chose not to follow that rule. Some of those companies chose not to take the R&D tax credit because they thought that they were connected, and they're actually two separate programs. Great news is that's completely repealed, and actually is repealed retroactively as well, depending on business size in terms of revenue. Again, there's a lot of details, but that I would encourage everybody to look into. But for startups, I think you're probably going to be safe. So that's got us really excited because that's going to be an instant cash flux into businesses that are innovating. And then at the state level, Minnesota specifically made the R&D tax credit available via payroll taxes, to be much more startup friendly than they were 2-3 weeks ago. So that, combined with legislation in places like Michigan, Connecticut, New Jersey, there's a lot of state level R&D talk as states start competing for where startups are going to put their nexus or put their employees.
Well, and that's what's great about working with someone like you who's connected to sort of a broader network of interstate professionals. If there's something that you have a question on or that you're not completely up to speed on, you can likely work with a colleague that's in another state.
I definitely am not going to be doing any of this work. I'm not a CPA or a tax attorney by trade. We have 300 of those that do great work, and I'm just the front door to help make sure that no one's wasting their time and to make sure that everybody knows about it. Because the stat from the IRS's perspective is only a third of companies that qualify for the research and development tax credit even pursue it. So a lot of money to the tunes of billions of dollars is on the table, literally getting lit on fire every year.
Excellent. Well, that's good to hear. And I think this is a good opportunity too for listeners who might be tax professionals to find out how to connect to some other tax professionals who would understand this and maybe could give them a good rundown.
Well said. Absolutely.
Okay. Excellent. Well, so Kasey, we met through the Bullpen Club, of course, and you're a member. So you want to tell us a little bit about what you like about that club? I know I'm a huge fan as the KOL director, but it's always fun to have somebody else talk about it.
You know what? I like the motto of the club is something that is palpable throughout the culture of everybody there, which is go help somebody. And it seems like it's a very collaborative group. Everybody really is there to help. And when you join, in my experience, a bullpen meeting, even virtually, I have been to some in-person events. The chat is just popping off with folks trying to connect and commenting on other things. It's to the point when I join a bullpen meeting, I'm usually busy for the next couple of weeks because there's meetings and connections that are happening after that.
Awesome. That is awesome to hear, and I'm very glad of it. So, what else is happening for you this summer? What else are you excited about besides these new retroactive tax credits?
Personally, I'm excited for it to not be freezing in the state of Minnesota. So I like getting outside. And then, especially with the other parts of the One Big Beautiful Bill Act, again, my background has been in HR tech and outsourcing. And so there's just a lot to sort through when it comes to employment as it relates to that. And so I'm really interested to see that. I'm really interested to see how venture capital markets continue to respond in 2025. I know everybody thought it was going to come out guns blazing in 2025 with a massive influx of capital. We haven't seen that yet. And so, as somebody who works with startups, really interested to see if that might start changing, regardless of the legislation. And so, that's something I'm tracking. And then outside of that, I'd say we're starting to see a lot more in-person events, regardless of industry. And I'm really excited to continue getting out and meeting people that I've only known virtually for 5 years.
Perfect. That's excellent. Well, Kasey, thank you very much for sharing your expertise with us today.
Thank you for having me. I appreciate it.
Listeners, Kasey will join me on the Thinking Cat chat 1 week from Friday. Don't miss your chance to ask him your questions about R&D tax credits. Thanks for watching. Don't forget to like, share, and subscribe for more tips on navigating the life science industry.